As of the close of market on Friday, December 19th, 2025, the stock price for Datavault AI Inc., trading under the ticker symbol DVLT on the NASDAQ, sits at 0.97 USD. This represents a sharp intraday decline of 0.099 USD, or approximately 9.24% today. Since today is Sunday, December 21st, 2025, the market is currently closed, meaning this figure is the most recent data point available before the opening bell tomorrow. While the price alone is enough to cause concern for anyone with a position in their individual brokerage, the real story lies in the volume. We saw over 93 million shares change hands in the last session, which is more than 3 times the average daily volume. When you see that kind of massive movement to the downside on such heavy volume, it tells you that the market isn't just reacting to a headline, it is actively repricing the entire risk profile of the company. The expectation heading into this weekend was one of optimism. The company's CEO, Nathaniel T. Bradley, recently appeared on Newsmax to discuss a massive shift in the regulatory environment, specifically focusing on the federal approval of cryptocurrency-focused national banks. On the surface, this sounds like the perfect tailwind for a company like Datavault AI, which positions itself at the intersection of artificial intelligence and blockchain technology. However, the reality we're seeing on the charts is a stark contrast to that narrative. Despite the proximity to major news about the tokenization of real-world assets and the broader institutional adoption of digital identity platforms, investors are heading for the exits. This creates a fascinating curiosity loop. Why would a stock lose nearly 10% of its value on a day when its leadership is touting government-backed growth? The answer likely lies in the tension between high-level projections and the cold, hard data found in their recent financial filings. If you are currently looking for investment help or managing your own self-investing strategy, you've likely noticed that the market is currently rewarding execution over promises. For a long time, the narrative surrounding Datavault AI was built on the idea that they were the primary infrastructure provider for the next generation of data monetization. But when we look at the actual numbers, the disconnect is jarring. In their third quarter report for 2025, the company reported revenue of $2.9 million USD. While that is technically a 148% increase year over year, it was accompanied by a net loss of nearly 33 million USD. For someone looking at investing sites to find the next big runner, those figures are a massive red flag. The reality of the situation is that for every dollar they bring in, they are spending significantly more just to keep the lights on and the technology moving. This is the kind of math that makes professional traders on the Interactive Brokers trading platform very nervous, leading to the kind of heavy selling pressure we witnessed on Friday. The common ground here is that most retail investors, especially those using the Robinhood app or the SoFi trading platform, are drawn to the company's aggressive guidance. Management has raised its 2026 revenue projections to exceed 200 million USD. That is a staggering number for a company that hasn't yet cracked the 10 million USD mark in annual revenue. To bridge that gap, Datavault AI is leaning heavily into its Dream Bowl meme coin distribution, scheduled for December 24, 2025. They are planning to airdrop these tokens to eligible record holders of both DVLT and Silex Holding Company. The idea is to create an ecosystem where data assets can be traded on their proprietary information data exchange. But here's the contrarian take. Is this a genuine move toward utility, or is it a calculated distraction to keep the stock price above the $1 threshold? The stock recently regained compliance with the NASDAQ minimum bid price requirement in October, and dropping back into penny stock territory would be a major blow to institutional credibility. When you look at institutional activity, we see a split in the ranks. Big names like Vanguard Group and JP Morgan Chase actually added to their positions in the third quarter of 2025. This suggests that some of the largest players in the world of Fidelity Wealth Management see long-term potential in the company's patent portfolio, particularly in their acoustic science division. This part of the business focuses on YSI technology, which handles high-performance wireless audio transmission. It's a real tangible product with actual licenses in place with TV and projector manufacturers. Yet this fundamental value is being overshadowed by the volatility of their data science division and the constant noise of their crypto-related announcements. Comment below how many shares of Datavault AI you currently hold, and if you think this meme coin distribution will actually help the stock price in the long run. The pressure on the stock isn't just coming from the balance sheet, it's also coming from the legal front. Earlier this month, law firm Purcell and Lefkowitz launched an investigation into the company's corporate actions, which intensified governance concerns. This followed a period of intense short selling, with short interest hovering around 8% of the float. When a company is fighting a war on two fronts, one against short sellers and another against legal scrutiny, the stock price becomes a proxy for trust. If you are using Fidelity Investments or the Robinhood stock trading features to manage your portfolio, you have to ask yourself if the management's vision of a $200 million revenue year is based on realistic contracts or speculative hope. The expectation is that their partnership with Triton Geothermal for asset digitization will bring in millions, but these deals often take much longer to materialize than the market has the patience for. We also have to consider the broader sector momentum. While Nvidia stock and Apple stock have seen their own bouts of volatility, they are backed by massive cash flow and established market dominance. Tesla stock, though volatile, has a cult-like following that provides a floor for the price. Datavault AI doesn't have that luxury. It is a small-cap player in a space that is becoming increasingly crowded. When investors look at online investing options, they are comparing the risk of a high-burn company like DVLT against the stability of Fidelity ETFs or Fidelity mutual funds. The heavy volume on Friday suggests that many people are choosing the latter, moving their capital into more secure assets as we approach the end of the year. The company's business model is essentially built on two pillars. The first is the acoustic science division, which holds the IP for multi-channel wireless HD sound. This is a licensing model that doesn't require a heavy bill of materials, which should, in theory, lead to high margins. The second pillar is the data science division, which is where the Web 3.0 and high-performance computing elements live. They are trying to create a system where personal data, such as genomic information or a professional athlete's name, image, and likeness, can be tokenized and sold securely. This is a massive addressable market, but the execution risk is high. They've signed licensing agreements with Silex and are working on an international NIL exchange, but the path to monetization is littered with regulatory hurdles. Looking forward, the catalyst for a potential rebound would be a successful distribution of the Dream Bowl tokens and a clear demonstration of their utility on the Information Data Exchange. If the company can prove that these tokens aren't just a marketing gimmick, but a functional part of a new data economy, the sentiment could shift overnight. However, the risk remains that the market will continue to focus on the mounting operational losses. With a net margin that is frankly hard to wrap one's head around, the company is in a race against time to reach scale before its cash reserves dwindle. For those using the SoFi Active Investing platform or a Robinhood cash management account to keep their funds liquid, the current volatility in DVLT makes it a high-stakes gamble rather than a traditional investment. If you're comparing this to other online investment opportunities, you have to weigh the high beta against the potential for a massive payout. Analysts have a consensus target price of around $3, which would be a significant gain from the current 0.97 USD level. But analyst price targets are often lagging indicators, and they don't always account for the kind of rapid-fire selling we've seen in the last few sessions. Institutional ownership has increased, which is usually a good sign, but even the big players can be wrong. Or they might be holding for a timeline that is much longer than the average retail trader can afford to wait. The story of Datavault AI is a classic example of the tension between expectation and reality. The expectation is a high-growth, tech-forward leader that is going to own the data monetization space. The reality is a company with brilliant patents but a burning balance sheet and a stock price that is struggling to stay in the good graces of the NASDAQ. Whether you are using the Interactive Brokers platform for its deep analytical tools or just checking your Fidelity mobile app once a day, the message from the market is clear. The time of talk is over, and the time of revenue is here. In summary, we started with a stock price at 0.97 USD, down over 9% on a Friday that saw historic trading volume. We've looked at the gap between the CEO's confident media appearances and the sobering reality of the Q3 earnings. We've explored the potential of the YSI audio technology versus the speculative nature of the dream